Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your residential real estate report for April. We're looking at the data for March, but today is April the 6th, 2023, and I'll be right back with that report. All right, so I'm back, and here's our report for, again, we're looking at the data. We're going back in time on the sales data from March of 2023 here in April. Now, we always start off with our resale homes because that's the biggest portion of our market. And we put together these lovely little charts here. And what you can see is the inventory. This is the number, what I'm looking at. The inventory is really leveled off a bit. We had a little bit of a spike in sales, and then a little bit of a spike, but a growing gap between the sales and the pendings towards the latter part of March. All right, so here's what we're talking about. Pending contracts are down 23.6% year over year. So in 2022, March of 2022, we had 488 pending contracts, and then we only had 373 during the month of March 2023. Sales, 18.2% down year over year. We had 500 sales this month compared to 611. Again, resale only. This does not include the new homes. Now, I can remember a couple of years back where 500 was a great number, and we were happy to have that in the month of March. I can remember years where we had 350, maybe 400 sales. So 500 is still a really good number, and the inventory is moving relatively quickly. Months of inventory is up 68.2%, but you don't feel it that much because it was so low a year ago. I mean, we were at 0.8, less than 30 days worth of inventory, and now we're at 1.48, roughly 45 days worth of inventory. It's still being a market where it's fast moving inventory, especially in the lower price ranges. We're still getting multiples of offers on things, and that caps out somewhere around $300,000 for the most part. Average price is up 4.4%. That's kind of tracking what we saw at the end of the year appreciation numbers in 2022. We'll get to that in just a couple of minutes. And the average size of the home down just a little bit at 2.9%. So my prediction from over a year ago is actually starting to come to fruition, is that as those prices go up, the average size of the home goes down. And that's going to be something that we'll continue to watch over time. Price per square foot, 9.6% up, and days on market is up to 50 compared to 36 a year ago. Now, on to our new homes report. We're kind of seeing some of the similar things, but here, inventory took a nosedive in the month of March. And what happened is there were a big number of homes that had been listed for about 6 months on the multiple listing service, and they expired right at the end of March. We had our highest expiration numbers in the month of March than I've seen in a couple of years. And I think that's what we're seeing here in the inventory numbers, is that we just had to go off the market. They didn't come back on, and maybe they will over the next month or so. Specifically, pending contracts, 23% up year over year. Yes, that's a positive number. We had 183 in the month of March 2022, and we had 226 pending contracts in 2023. And I've been saying for quite some time that the new homes are where the opportunities are, because we're not having as many bidding wars. The builders are giving incentives, so the prices are coming down. The incentives are going up because they're paying closing costs, and they're maybe even buying down some loans. I've heard of some 2-1 buy downs. Speak to your lender about that, how that works, to where the builder actually buys that rate down for 2 years and then 1 year, and it continues to give them the savings year over year. Sales down 9% year over year. Months of inventory up 79%. Now, we had about 3 months of inventory last year, which really meant maybe about 1.5, because we had some listings that had just been entered. There wasn't a house there. We had some that had been entered 6 months ago. That's a fully completed home. So somewhere in the middle, about half of them is what the real inventory probably is. We're up to about 6.41. That's going to give us roughly about 90 days worth of standing inventory that would be complete and ready to move into, and those are the homes that the builders are giving the incentives on right now. If they just started a project, they're not going to give much on the incentive range because they haven't completed it yet. But as they get towards that completion date, that's when they start giving the incentives out in order to get that thing off their books. Average price up 4.8% up to $304,772, and average size is now going down just slightly at 1,920 square feet, 5.3% year over year. Price per square foot 10.9%, so almost 11% change year over year. We're right at $160 a square foot. Remember, that's for the total package, and yours may vary depending on who the builder is. And when you're talking about building a custom home, forget about that number altogether, because the majority of these homes are what we call mass market built homes, and these are the builders that have great efficiencies of scale, where they're taking a street and just moving the slab guys from here to there, and just, basically it's an assembly line on a street, and they've got great economies of scale that are going on. Days on market, 131 compared to 157 last year. Why is that? Well, they can finish the home and the appraisers are coming out and doing the work. So overall, good report. Now here's some of the good news. We had a rate increase on the overnight lending rate, 0.25% back in mid-March. But after we had the failure of Silicon Valley Bank, and we had the other bank, and I can't remember the name of that, but it's the one that had all their money in Bitcoin and or the digital currency stuff, mortgage rates took a dive, and today they're at 6.3 average 30-year mortgage for a conventional conforming loan. 20 years is at 6.19, so you can get a better rate there. Now here's the unseen opportunity that we got to do some more research on this, but there are a lot of VA loans out there that are at, say, 2.8% on the low side and maybe up to 5% on the high side. For you veterans that are watching this, that might be an opportunity for you to be able to get into a lower loan if you've got a veteran or an active duty soldier that's coming up selling their property. So check with your Veterans Administration to see how you can assume somebody else's loans. And if you're a seller with a VA loan, can you offer that to a active duty soldier or service member or to a veteran that they can buy it? And that's an incentive, because a lot of the veterans have been just not necessarily locked out, but they've not been competitive in the marketplace because of the fact that they're going with a zero down and they're getting the higher interest rates. So look into that with the Veterans Administration to see how, if that's possible, and if a seller is willing to do that. Mortgage trends, they leveled off, dropped just a little bit towards the end of March, so 6.3 was the rate that we reported today, and then couple that with the appreciation that we had reported in 2022. Again, we were at 49% over the past 4 years, and those notices of value are starting to hit your mailboxes. I got 3 of mine this week, and the rates went up, and it's going to be hard for me to defend a lower assessed value on my properties because of this chart right here. Now this is what it looks like when you couple it out there, but we had 11.1% appreciation in 2022 overall, even though we had a negative 0.09% in Q3. Okay. Index returns, this is your S&P, Dow Jones, things like that. They're starting to show some positive numbers up there, 7.03 year to date, but still year over year negative 9%. Compare that to the real estate market. Real estate's still doing pretty good. Treasury yield, the green line is 2022, the purple line is 2023. They're still better than they were in 2022, but you do see a big drop over the last 90 days. Unemployment rate, look at that green line right over here. We had an increase in January. That's the latest month that Dr. Fullerton got out to us. I downloaded these yesterday. These come from Dr. Fullerton over at the UTEP Border Barometrics on the economy, and we had a little bit of a spike in unemployment back here in January. We don't have the February or the March data out yet, but that's not a good sign when we're up above 5% here in our local marketplace. The tech sector worldwide is seeing layoffs all over the place, and is that the sign that the economy is starting to slow, and maybe the Fed is going to say, okay, it's time for us to level off on that overnight rate, and maybe that March increase was the last one? time will tell whether or not this continues to go up, but that's going to be a leading, or rather a lagging indicator on the economy. So here's the big chart. That was COVID-19 that we saw there. Here's Donna Ana. They also saw a little bit of an increase. So that's Santa Teresa, Sunland Park, Las Cruces. That's the area that we're looking at on that. 3 key takeaways for the month. Number 1, buying activity appears to have leveled off. Okay, so I'm looking at it on a weekly basis, and it seems to have leveled off year over year. But our spring market typically kicks off somewhere around Easter. That's a couple of days from now, and then after tax day, which is on March 17th this year, and then we start seeing the inventory to rise and the buying activity to rise. Remember, we had a huge drop year over year in March. The lock-in effect, it appears to be keeping inventory low. So when we look at year over year, the new inventory that came to the market in 2022, we had 1,099 new listings come on the market. In this past month, we had 1,049. That's a 4.5% year over year difference in new product coming to the market. Not necessarily a new home, but a new home listed, whether it's a resale or a brand new home. There is a little bit of a drop there, and that may be because of that lock-in effect. And number 3, same as what we had last month. Despite these issues, residential real estate in El Paso continues to be a great investment, and I highly encourage you to look at that if that's part of your long-term strategy for building wealth. See how you can get into residential real estate, make it into a rental property somehow, and then hopefully cash flow it, and then that builds you wealth as our inventory as the appreciation goes, and it builds you wealth over time. It's a slow growth strategy, but it works. It's been working for me, and I highly encourage you. That's our market overview for March 2023 here on April the 6th. And if you've got questions about this information and how it affects you in your residential real estate investment, sale, purchase, whatever it is, I'd be happy to answer those questions for you. You can reach me here at the office at 915-585-7777 or on my cell, 915-588-1850. On the web, patrick.tuttle@coldwellbanker.com. And I thank you for watching. God bless you. Happy Easter, and make it a great day. Bye-bye.